Hi, welcome to the Market Alert for Thursday the 28th of April 2016, and welcome to the Twilight Zone, that is the financial markets. So yesterday at halfway through the first part of the session, we see that we had the market moving lower, but this was waiting for the crude oil figures, so unfortunately wasn't able to trade this one, but then the market moved lower, and the reason they moved lower was because the figures came out at 2 million barrel surplus as opposed to the forecasted 1.4 million barrels. This sent both crude oil lower and also the Dow, which we see here. The market then found support at the low before the session and then traded to the upside there. Obviously, as I've said before, they want this market up. You can see the market continuing to rise there as prices head back to the magical 18,000 level and then are eventually stopped out just above it as the market then went into a sideways move waiting for the FOMC meeting, which we see didn't do an awful lot. As I said, that it wouldn't only manage 50 points there, and then we had a quick short off there before the market rallied back with no signal. So not too bad a day considering that we've got the FOMC. We couldn't do anything about the short because crude oil has now been elevated to a high impact news item. It used to be a medium impact one, but not anymore. In the daily chart, you can see that the market managed to get up to the 62% retracement that we've had in there, and now we see the market moving lower on the overnight. And I'll come to that in just a moment. News-wise today, we've got advanced GDP from the US. This will be an interesting one, but it's out before the market opens, and then after that there is nothing else really to move the markets, although saying that there may be other things that are behind the scenes that are currently setting up for a move to the downside. Speaking of which, the main one of these is of course the implied volatility. This moving lower, and we have a new low in the historic volatility, the blue line. The yellow line also down yesterday from down from 1196 to 1158 as well. So what's going to be the sort of future for this market? Well, if we have a look at zero hedge, you can see from the S&P somebody's created this chart, and we have a 6-month cycle where we seem to get moves to the downside, and it looks like we're ready for the next one, and the implied volatility is certainly pointing towards that. I'm just going to go back to that because I'd like to reinforce how powerful the implied volatility is in predicting the downside of a market. And you can see the market last year, if you go back and look at the market alerts, they're all available on the YouTube channel, and you will see that I was talking about the move that we had in August when we had the massive 1,000 point drop before the open of trade on the 24th of August. That was all predicted from the implied volatility. When the implied volatility gets into the lowest, down into these sort of levels, you get big corrections. And then we had the big drop in the new year as well, when the US increased interest rates just before Christmas, as soon as we got to New Year, and we saw the volatility then take off as well, having come back to the lows again following the August drop. So we're now back in this situation here, but we've got record lows in the historic volatility, and that's a fascinating picture to actually see. So why is the stock market down overnight? You can see if we go back to the 5-minute, I'll just drag this over, you see we've had a big drop of over 100 points on the overnight, and the reason for that is quite simple. That's to do with the Japanese bank. And you can see there, Japanese bloodbath after the Bank of Japan disappoints. Nikkei drops 1,000 points, USD JPY crashes. If there was a sign that nothing else matters but central bank largesse, this was it. And this is the problem. The central banks now have taken over the markets and over everybody's life, frankly. And of course, at some point it has to come to an end. The printing of the money isn't working. They keep printing more, reducing rates, you name it, they keep doing it. I'm sure they've got plenty more of other tools, and in fact, yesterday I read an article where now Ontario are considering giving every resident $1,000 a month. It's going out on trial shortly, and I'll see if I can find the link to it and include it in the email. So the madness continues. It's known as helicopter money. And, when I've spoken to people about it, they said, oh, they'll never do that. They won't give people money. But they're starting to do it. Also, the Netherlands and Finland as well. Anything to keep the debt-based economy and illusion alive is what it's all about. Central bankers are full of hubris and without any idea of what to do given the mess that they've actually created. So it's going to be interesting to see how this one unfolds. So that's what's happening there. And talking of central banks, if we look at the top story this morning, this is the end. Venezuela runs out of money to print new money. Venezuela is now so broke that it no longer has enough money to pay for its money. Okay, that's it for today. I will see you in tomorrow's edition. If there's anything else to report in the meantime, I will let you know via email. Other than that, thanks for watching. See you in the next one.